When you zoom out and look at what's happening with Opendoor right now, you can't ignore the timing of this week's big macro event, the Federal Reserve's interest rate decision. At 2 o'clock Wednesday afternoon, Jerome Powell and the Fed will announce whether they're going to hold steady or finally begin cutting rates. And make no mistake, whatever happens, this decision matters directly to Opendoor's business model, to the housing market, and ultimately to the trajectory of the stock. Now, let's get right into it. Why is the Fed so important to Opendoor? Because Opendoor isn't just some abstract tech play, it's tied to the very real mechanics of housing affordability. When interest rates are high, mortgages are expensive. Fewer buyers are out there shopping. Sellers sit on the sidelines because they don't want to give up their low-rate loans. Transaction volumes fall. And when transaction volumes fall, Opendoor's engine has less fuel. Flip that around. When rates fall, affordability improves. Suddenly, more families can qualify for mortgages. More first-time buyers enter the market. More sellers are willing to move. And when that happens, Opendoor's model starts to hum. The more transactions that flow through, the more scale Opendoor gets, and the more their AI-driven pricing and platform advantages kick in. So yes, the Fed is not some distant force. It's a direct catalyst for Opendoor. So let's look at the scenarios that could play out on Wednesday. Scenario 1, the Fed holds steady and makes no cut. Now, some people might see that as a disappointment. After all, investors have been hoping for rate relief for months. But let's be real, it would be more of a delay than a denial. Everyone knows that cuts are coming this year. Inflation has cooled compared to last year. The labor market, while still strong, is showing signs of balancing. And Powell has already indicated that the direction of travel is toward easing. So if there's no cut this Wednesday, the market may wobble in the short term, but the bigger picture remains the same. Rate cuts are coming. And when they do, Opendoor is ready to benefit. For long-term investors, this scenario is basically a chance to add more shares while we wait. Scenario 2, the Fed cuts by 1/4 point. This is the most likely outcome. A 25 basis point cut is symbolic. It marks the start of the easing cycle. It signals to markets that the Fed is confident inflation is under control enough to begin letting up. For Opendoor, this is huge. A small cut may not instantly flood the housing market with buyers, but it sends a message: the tide is turning. Mortgage rates, which have been punishing buyers for the last 2 years, could start to creep lower. Every notch lower on the rate dial opens up more transactions, more volume, and more revenue for Opendoor. And psychologically, it's confirmation that the hardest part of the storm is behind us. Then there's scenario 3, the Fed surprises with a 1/2 point cut. Now, let's be clear, this is less likely. But if it happens, it would send shockwaves through the market. Growth stocks would rip higher. Real estate plays in particular would catch fire. And for Opendoor, which is already in the middle of a transformation story, this would act as rocket fuel. The shorts who have been pressing their case would be forced to reassess. A 50 basis point cut would scream urgency from the Fed, and it would turbocharge the bull case for Opendoor almost overnight. If you think the stock moved big on board reshuffle news, imagine what it could do with a surprise rate cut like that. So those are the scenarios. No cut, 1/4 cut, 1/2 cut. And here's the thing, the bullish case for Opendoor holds in every single one. If there's no cut, we know cuts are still coming. If it's a 1/4, that's the beginning of the easing cycle, which is exactly what we want. And if it's 1/2, well, buckle up. Now let's talk about how institutions are looking at this. We've already seen signals that JP Morgan is warming up to Opendoor after the leadership changes. Analysts know that interest rates drive housing cycles, and they know that a company positioned as the digital platform for real estate is going to be one of the biggest beneficiaries of looser monetary policy. That's why institutional investors are watching this Fed meeting so closely. They're not just thinking about Wednesday, they're thinking about the whole year ahead. The market is pricing in multiple cuts before the year is done. That sets up a strong macro backdrop for Opendoor, no matter what happens in the immediate session. And then there's the retail side, the open army. For the retail base that's been driving so much of this momentum, the Fed decision is just another accelerant. The real conviction comes from the belief in the company's transformation under Kaz Nejatian. Remember, Kaz left Shopify, where he was the number 2 guy, walking away from hundreds of millions in upside, to lead Opendoor. That's not a man taking a flyer. That's a man who sees a bigger opportunity here than what he had at a $200 billion company. That should tell you everything you need to know about the potential he sees in Opendoor. Kaz is already moving fast, announcing nationwide expansion into all lower 48 states, hiring engineers, setting a pace that signals urgency. And with Eric Wu and Keith Rabois back on the board, this isn't just another management shuffle. This is a return to founder DNA, the spark that built Opendoor in the first place. Pair that with Eric Jackson on the outside leading the open army, growing his following, speaking every day about his conviction, and you've got leadership, vision, and retail energy all aligned. That's what makes this Fed decision such a fascinating backdrop. Because no matter the outcome, the story here is bullish. A no-cut decision? Fine, the cuts are still coming this year, and Opendoor will benefit when they land. A quarter-point cut? That's the green light for institutions to start modeling higher volumes into their forecasts. A half-point cut? That's the kind of shock that could turn Opendoor into one of the hottest growth stories in the market overnight. And let's not forget the short interest. With Opendoor's float still heavily shorted, every bit of positive momentum matters. Shorts can tolerate small dips, they can handle some profit-taking, but what they can't withstand is a company that's executing at speed, expanding its markets, and catching tailwinds from falling rates. That's how squeezes happen. It starts with a floor forming, like the $9 level we've seen holding. It continues with leadership executing. And then a catalyst like a rate cut comes along, and suddenly shorts have to cover. That's when the real fireworks begin. I want to make a point here that's important. It's easy to get caught up in the day-to-day price moves. Was it up 40 cents? Down 50 cents? Did it close above 9 or below 9? Those things matter in the short term, but the real story here is bigger. This is about Opendoor positioning itself as a growth tech company again. With AI at its core, with a platform mindset, and with the founder vision back in the driver's seat, this is no longer just a cyclical real estate stock. It's a disruptive platform play, one that institutions are starting to understand and retail already believes in. That's why the Fed decision matters, but it matters as an accelerant, not as a decider of the whole story. So as we head into Wednesday's session, here's the bottom line. The market is focused on Powell and the Fed, but for Opendoor, all three scenarios point to a bullish outlook. No cut. Cuts are still coming this year, and Opendoor will benefit. A quarter cut? That's the start of the easing cycle, which directly helps housing and transaction volumes. A half-point cut? That's a rocket strapped to the bull case. At the same time, Kaz Nejatian is moving with urgency, showing that he's not here to coast, he's here to transform. Wu and Rabois are back on the board, bringing founder DNA and credibility. Eric Jackson is more vocal and more convicted than ever, drawing in new investors every day. And institutions like JP Morgan are beginning to shift their stance. Put it all together, and you've got a company that's not just surviving volatility, it's building momentum. You've got a retail movement that's not just chasing a trade, it's holding for the long-term vision. And you've got a macro backdrop that's about to turn in favor of housing and real estate. That's why I remain bullish heading into this Fed decision. No matter what Powell announces, the path forward for Opendoor is clear. The company is transforming. The leadership is aligned. The vision is intact. And the catalysts, both micro and macro, are stacking up in its favor. For those of us who believe in this story, $9 isn't the destination. It's the launch pad. And the Fed decision on Wednesday? That's just the next chapter in what is shaping up to be one of the most exciting growth stories in the market today.